Okay.
Morning, everybody. Welcome back to the Opportunistic Trader. It is December 14th, just after 10 a.m., and we are joined by Phil Flynn of the Price Futures Group and Fox Business Contributor. How's it going this morning, Phil?
I'm doing good. I'm doing good. Markets were a little shaky this morning on some of the data that came out of China, but I'm doing great.
So let's start with the energy markets. We have crude oil Jan options expiring today. We're trading right now at about 52 and a quarter. We were trading yesterday in the low 50, 50, and then we had the Saudi news come out. What's the story with that, and what's the implications over the next few days?
I thought it was interesting in the Saudi news, and the report you're referring to. It's the report that the Saudis are going to stick it to the U.S. and basically cut oil supplies to the U.S. And that got the market up over 2% yesterday, and it closed with a bullet, which is something we haven't seen in a while. For the last couple of weeks, the mood has been so negative in the oil market that we close, with the down arrow, and we can't hold on to a rally. Inversely, today after that story, yesterday we closed with strong momentum into the close and even into the aftermarket. And what's really frustrating about that, Michael, is that anybody who really watches the market basically knew that the Saudis were already cutting exports to the U.S. Because the tanker tracking companies have been saying it for the last 3 weeks. But it takes a headline article by a news agency to get people to focus on the actual fundamentals. And so once you look at the fundamentals and you realize that we're losing supply from Saudi Arabia, we're going to get a huge cut from OPEC, we're going to cut in Libya due to a force majeure, we're going to cut in even Canada, for heaven's sakes, that the supply situation, based on the fact that we're near record demand here in the U.S., is going to be very, very tight. And it's funny that it took a headline to get people to focus on that.
Sorry, just having audio issues.
Yeah, no problem. I mean,
so what do you think for options expiration? Is there anything that looks interesting, whether it be in the premium or where we are price-wise?
Yeah, I mean, I look at the action today and in the action in oil this week, and we really feel that the market right now is out of line with the fundamentals, partly because of the reduction in supply that we have. Part of the reason why we've seen this big sell-off in oil has been the unwinding of hedge funds. And I thought it was very interesting this week to read that in this quarter, over 174 hedge funds were liquidated. And guys that have been around for years that have seen this record volatility, just they can't handle it. And they've been breaking things out. So it shows you that what we're seeing in some of these markets, I think especially in oil, really have a lot to do with the supply and demand side. It's more about fund liquidation, and that's why we saw, why we've seen this weakness in the market. There's been a lot of weak hands on the long side. They got caught the wrong way because of the President Trump tweets and the cuts for Iran and the waivers, and they're struggling. Having said all of that, I think the bloodletting should be coming to an end here pretty soon. And we hope that then the oil price will get more in line with the fundamentals and start moving forward.
Yeah, well, it's definitely a lot of volatility. We were trading up; it's above $70. Now we've coming down to the low 50s, and even looking at yesterday's news, relative, it's a small pop. Like we did move about 4 or 5% from the lows, but we're still pretty.
Well, the longest journey begins with the first step, right? First, you've got to establish the fact that the market isn't going down anymore, or at least not, selling into every rally, and then, you have to get the step for the mentality to go along. And then you've got people who are afraid to buy because, even though the data is bullish, the market keeps going down. So people are afraid to step in. At some point that'll change. I mean, it'll change. When we get like a headline like we did yesterday, or when we start looking at the data and we start seeing big drawdowns in supplies, which we're going to see over the next coming weeks. And it'll probably change especially if we get closer to a deal with China. I think that could be a big turning point, not only for oil, but a lot of commodities.
Yeah, well, the news overnight was a lot of negative global economic news from China, Japan, Europe. U.S. data was okay. But do you think that that's a sort of a lagging indicator or something that we should be worried about, as we enter Q1 of 2019?
I had a little hard time hearing the other question, but I think what you're asking is about the China numbers last night, and we definitely saw a drop in retail sales, big drop below expectations. We saw a big drop in industrial production, and that really set the global markets to the downside. On the other hand, from the financial side of the market, they actually got some decent numbers. And what we heard from the Chinese government is that, like, hey guys, yeah, we're seeing a slowdown here, but our balance sheet is looking pretty good right now, and we have the ability, of course, to stimulate the economy if we need to. And so there seems to be some bullets in their arsenal to do more stimulus, and possible readjustment of the currency. Of course, if they might be fearful of a tweet from Donald Trump about that, but that's a story for another day. So there's room in the system to stimulate the economy if need be, but that concern, of course, is driving the dollar index back up to a 15-month high. It's putting pressure on oil. It's putting pressure on commodities, and it's seeing some Friday money move into some safe haven buying on the dollar, and that's, of course, going to be interesting. But the day is early. We know we're one headline away from changing the mood again, because that's what this market has been doing. Hey, it looks terrible today, it looks great tomorrow. We get a headline, different report, a different mood, and things can turn really quickly.
Yeah, I don't know if you heard me before, but the question was more of, do you think that these global indicators that we've got in China, Europe, Japan, all kind of negative kind of PMIs and retail sales and data points, do you think that that's a worrying sign for Q1, or do you think that this is the low and it kind of can only get better from here?
I mean, there is flashing signs that, oh my gosh, we could be in a global recession. I listened to Mario Draghi this week. He said there's risks out there, but not more than he always seems to say, that there's risks to growth. Some of the data, I think, that we've been seeing weak is partly transitory. Part of it's weather related. Part of it is what's been going on with the over economy, and it's kind of interesting. If you want to get a gauge, I think I read a report that all the CFOs and all the money managers in the world are basically 50-50 split on whether we're going into a recession or not. I mean, so you hear a lot of times, oh, the recession's right around the corner. I think we just heard from PIMCO, the bond people. Oh my gosh, a recession, the odds are the highest level they've been in some time. But it seems like a market, for every recession caller, there's somebody calling for a big spurt of economic growth. So that, and I think that that in and of itself is why we're seeing the market volatility. Because we do have unanswered questions about China. We do have people evenly split on the economic outlook. You've got half the people saying, hey, we're not seeing any signs of a major slowdown. If you look at this indicator or that indicator, the slowdown's been modest, but we're still running near record. People that argue that there's no recession, look at the unemployment in the U.S., which is at record lows, basically. Anybody who wants a job should be able to get a job. There's more job openings than people to fill them right now. That should be good for wages. Other people would argue, well, that's a lagging indicator, jobs, that there are bad things around the corner. And at what point do you fear the unknown and it becomes a self-fulfilling prophecy and you get out of the market? Or at what point do you look at the actual data, put it into perspective, and realize that after a long, sustained period of growth, that it's normal to have, some leveling off of the numbers, and that's where you're at. Then you add the other context to this, of course, the China trade war situation, which has dominated everything. And because you've got such a mood there, it's definitely something. But as we say that, with the dollar going up we are seeing some more selling on the oil right now, and that's putting some downward pressure on prices right now. So.
What about with only under 10 days left in the year, trading days, I should say? Is there an opportunity that sticks out at you that maybe you're hearing other traders talking about? What are you thinking there?
Well, I mean, listen, I still think some of these energy stocks have been really overdone, because of the slowdown fears. So I really think that they are a possibility that we should be looking at. Um, I think if you look at some of the other uh, markets that we've been following here, I mean, if you want to stay safe, if you're worried about a recession, uh, the stocks that have done very well have been the industrial stocks. The other stocks, of course, consumer staples, they continue to do good, and they'll continue to do good if we get into a recession with safe haven buying. If we get into uh, another situation, I think, where uh, we're looking at economic growth, there's a lot of stocks that are probably really undervalued, whether it be the tech sector or the energy sector. So places to look at depending on what side of the 50-50 flip of the coin you believe in.
Yeah, no, that makes sense. I think that we've had a lot of volatility. We have the Fed coming up next week, and so that'll provide a lot more information, probably a bit more volatility around that. But then after that, it's only a few more days to the end of the year, so it'll get a bit quiet. But then Q1 is shaping up to be very, very interesting with the themes in China, Asia, trade, global growth. So it'll be interesting. But Phil Flynn, Price Futures Group, Fox Business Contributor, I really appreciate the help. Have a great weekend, and let us know if anything interesting pops up.
I really appreciate it. Thank you.
Thanks.
Bye-bye.